What's up, guys? Welcome. Crypto FUD. Let's jump right into this. All right. So today we're going to be covering Fetch AI, currently sitting at around 20.35 cents. We did have a little movement down as we've been having a slight movement in the last few weeks where it's been kind of wanting to go back up. And then we'll have another kind of slow move down. Nothing crazy, though. We're going to look at some of this in a second. Bitcoin right now currently sitting at around 28,800. It is down about $350 from yesterday. You know, these movements, they can seem like they're big movements, but in a bear market, I guess. But whenever we get into a bull market, if you haven't experienced an actual bull market, $300 is something that Bitcoin's going to do in minutes. It fluctuates literally like that in minutes because the volume is so high. You're talking thousands of dollar movements daily, like up 5 grand, down 5 grand kind of things. So whenever you have something like this, it seems like it's big in the short term, $300-$400. It's really not nothing much. It's just, because there's not a lot of volume as of right now. And with that being said, like I said, fetch $20 or 20 cents, 20.3 cents, $20. We will see that soon, right? Or eventually. I don't know about soon, but one day. Last night's drop, I put it in. The reason is what I'm thinking is because today we have job openings. They're going to be putting out the numbers as far as, how many jobs were the unemployment and all that stuff as far as what they expect and what the actual number is every month or every like I don't know when it comes out, if it's like quarterly or whatever the case may be. I think it's monthly. Whenever it comes out, there's always going to be some kind of a little movement just because the market doesn't know what to expect, especially in these times. And the jobs, I won't get too far into the weeds here, but it has everything to do with the Feds, Jerome Powell, and as far as them doing the rate hikes, they want to see, unfortunately, jobs going down. They want to see the unemployment going up. You know what so basically what it means is that they want to see where the economy is getting hit. People don't have money to spend to keep buying these products that are inflated, so things will start coming down, and that's the whole point of what they're trying to do, unfortunately. So let's get back to Fetch. So Fetch looked like they dropped down in the middle of the night last night at around 20.1 cent. I have this liner here because this was a spot where this previous dip, this was back, let's see here, this was like a month or two ago, back in June. So you see we dropped down to these numbers. It was around 17. The low was around 17 and a half cents. And you can see right here, I did get hit with some resistance right at that 20 cent mark, right under it. Well, that hopefully will be a spot. If we drop down to there, will be a spot where we can hold some support. We definitely don't want to keep retesting that spot because it will break and we might see something like this happen. I've told you guys this before with Fetch because I am a new bag holder. I have my Fetch at around 20 cents. If I can see, a 17 cent Fetch in the short term, I will not be upset because I'm just accumulating. We're not in this bull run yet. So you have to be patient. Obviously, the best thing to be patient is to be, and this isn't financial advice, but you always want to be using funds that are just sitting in your bank or sitting around that you do not need to pay your bills or feed your family. If you're using funds that you're going to need in a month or two, it's going to put you in a bad position most likely, because if we don't rocket ship out of here, you're going to most likely be down on that investment, which happens. You buy into something and it goes down, all right? That's why they always tell you, especially with crypto, stocks are a little bit different, if you're day trading, whatever the case is. But with crypto, one thing that I've learned, you can sit here and try to play the market and make, little 5-10% moves. But in the long run, a project like Fetch AI hasn't even began to hit the surface as far as exposure and just everything with its fundamentals. AI is such a new technology, and we're basically just opening the door for that. So Fetch AI is going to take some time. So we're going to see these movements, and if you're able to get Fetch AI at a fraction of a price, somewhere under 20 cents, then so be it. That's great because, like I said, And for myself, I'm in a accumulating zone where I'm just trying to accumulate as much as possible. So I'm watching these dips, and whenever we get down to where we dropped last night, I was up in the middle of the night with one eye open, by making buys, because it's lower than what I have it at, and I can keep just lowering my average. And that's really what the game is just accumulating as much as possible as long as you believe in this. Because remember, I'm not day trading Fetch. I'm not looking for this thing to go up to 25 cents and then sell. You know, right now we are testing the 618. 618's right there at that 20 cent, 20 point, pretty much 4 cent. We are testing it. I'm expecting, most likely, just because I don't know when the job openings come out. It could be this morning. I believe they are like somewhere around 8, 9 in the morning. So it's Eastern Standard Time. So it's probably in the next like 20 minutes. If the jobs come out and it's, whatever the hell, that they didn't expect, I don't know the numbers. We're probably going to come down and retest this 19. It's going to be right under 20 cents. I think that getting under right when it goes from 20 to 19 cents is going to trigger a lot of buys. It's going to trigger a lot of buys in the short term, and we're most likely going to bounce right here back up to the 618. Like I said, we do not want to keep getting rejected at this 618, and we definitely don't want to keep testing this 19.9 mark, because if we keep staying in, if we stay or get into this little channel right here, it's going to break most likely to the downside unless we see Bitcoin rally up to like $30,000 again. That's the only thing that will save it in the short term. Like I said before, though, we drop right where we're at right now. Still, to me, it's lower than where it's been in weeks, right? So it's still not a bad spot right now, dollar cost averaging in. But I'm gonna wait to see what happens with these job openings, and if we do come down to this 19 mark, it'll trigger more buys for myself to add to my bag. But other than that, I don't see much of a big movement up as of right now. It will come. Like I keep telling you guys, I'm just trying to give you hopium. This is a long-term project. Fetch hasn't even begun to even scratch the surface. So right now, for myself, not financial advice to anybody out there, I'm just accumulating, adding to my bag, lowering my dollar cost average price, and that's that. I'm just going to keep waiting until we get into this bull market, whenever this bull market does occur. With that being said, make sure you guys are subscribed to the channel, because when things do start moving fast and we get into this bull market, I will make sure to be coming out with multiple videos a day just to give you those key levels to watch. Other than that, again, thank you guys so much.